We've got Ben in the audience. We're going to bring him on up here. Ben.
Hi, guys.
Welcome to the show. Thanks for hopping in.
Good morning or good afternoon, wherever you guys are.
We're both east, west, and mid coast, so it's times very different.
Time is an illusion.
Yeah. Okay. So you popped up on my radar as we started really focusing on covering compute lately. I'm thinking maybe we talk memory, Bloom Energy, maybe follow up on your piece, tokens of the new oil. But right now, memory stocks are dragging down the Korean stock market, and therefore kind of like causing a lot of existential questioning among some of the weaker-willed AI trade people. What are your thoughts on the current state of the market? SK Hynix, memory pulling back.
Yeah, so the whole idea behind memory in this AI trade is that the idea of having more memory it's like having like a bigger brain, right? So the more context your AI model has, the more data points, hypothetically, it will make a better decision, right? And as we're training bigger models and we're generating more data, you need more ways to store it, your weights and the information quickly to retrieve it. So that's why NVIDIA with Hynix, many years ago, came up with this idea of high bandwidth memory. So basically taking the memory that we have like in our computers and stacking them like lasagna pieces higher and close to the GPU. And you can't have AI without memory. So it's like almost like peanut butter and jelly when it comes to that stuff. So they all come together. The challenge is from like a market perspective, memory companies have always been treated like a commodity because it's like a fungible type of asset. And you had three players, Micron, Samsung, and SK Hynix, and I guess CXMT out of China, right? Just IPO'd. And there's a world market for that, and there's pricing. And most of the time, consumer electronics companies like Apple would buy their memory for the next iPhone or laptops or Dell or whatever. You never had those challenges. And I think when there was like a big computing cycle, like I guess PCs or the iPhone in 2007, 2008, yeah, memory prices shot up. And a lot of these companies were wary of spending capital on expanding their fabs because they know when there's a downturn in demand, they're going to be left with all this extra capacity, and then there's no one to utilize it. And now you have this killer app of AI, which is sucking up all the memory, and you're not just using a few pieces, you're using gigabytes and terabytes stacked in these data centers. And it's not only NVIDIA, every hyperscaler is trying to secure memories, signing, long-term agreements that go into 2030, and there's like a huge memory crunch. And I wrote this piece last December called "The Memory Wars." We haven't even gotten to definitive high-resolution world models with video and audio. Like right now, we're still playing agentically with text and code. Like the next level is even crazier, and that's why you need to have these improvements in the compute and the memory to bring in more vivid interpretations of AI, which haven't been there yet. On the market dynamics, I have this feeling that, nothing against crypto and things like that, but the Bitcoin market is sort of soured in the excitement and the altcoins. And I think a lot of investors or traders were looking for a way to play a new theme. And obviously memory is something very exciting. And these companies were dogs for many years. If you look at the charts, they don't really go anywhere. And they traded on a factor of book value of what the assets of the company were worth. And now companies like Micron or Hynix are making, 20 years of earnings in a few years that they never made. And everyone's going crazy and trading them. And it's pretty wild. It's not for the faint of heart. And you had things go parabolic in the summer into June, or which was last month, and now you're facing these huge drawdowns and margin cascades and leverage and hyperliquid and like all this other stuff, which fundamentally is it's scary and it's not easy to withstand. I mean, I have a small allocation of my portfolio to that, but nothing is big because I can't handle these gyrations. But memory is always important.
So it sounds like the memory trade, like the memory bottleneck is still definitely on. And I'm trying, I'm familiar with the volatility. We've been covering Bitcoin for many years. Um, but it sounds like the structural bottleneck is still on. Talk me through this. I'm actually kind of curious, especially in light of the CXMT listing. It seems like a lot of the investors are trying to move down this high bandwidth stack to look at DRAM as like a precursor component. But am I like where among the like memory trades, where are the greatest bottleneck?
I think really what it comes down to, even it's not even memory, it's packaging. Advanced packaging is the idea is you have to stack these pieces of memory together, and this miniature like connector wire has to go through all of them exactly. They were trying to go to 16 high, and I think they got stopped at 14 because it's you have to stack all of them exactly perfectly down to the micrometer to get it to work, and you end up wasting a lot of wafers because a lot your yield isn't there because it's so hard to like put together. So getting that automated and not wasting as much and making sure it works is kind of like the real bottleneck. And I think that's why you saw NVIDIA invest, I think or not invest, but forward purchase $1.5 billion in Amkor packaging in Arizona. Uh, you have a lot of these test companies like Lam and Vico Instruments. Like you need to make sure this stuff you can make it and it's automated, but not everything comes out 100% right, and you end up throwing away a lot, and that's a big issue, the waste with the yield. I think that's like the real bottleneck, in my opinion.
Ben, a quick question about a temperature check from you and where you think we are in this current cycle. So, as you know, we've been touching on SK Hynix, Micron, etc. SK Hynix down like 25% since its debut on the Nasdaq. Micron down like 33% over the last month. What's your take on this price action? Do you see this as a natural deleveraging event, considering these stocks were really hot for the first half of 2026? Or do you think something has structurally changed in the way that the market is pricing these things?
I think anytime you have parabolic moves, it shoots too high on the upside and it shoots down on the downside. I think moves like this really test your conviction in the company and what they're doing, and if you really believe in the management and the roadmap and where you see AI or the technology that's headed. I mean, I've lived through many drawdowns from 2016 from being an NVIDIA investor, from the Bitcoin meltdown in 2018 to 2022. The huge every day it was going down, and a lot of people want great returns, but as an investor, you get paid for the volatility, right? That's how you earn your keep. These things just ran up way too fast, too much leverage, too many leverage products. I saw traders in Korea who don't even know what's going on. We're getting 500% leverage. That's just not normal. That's not investing. I'm not going to quote Warren Buffett and say the market is a huge casino, but some of these products that have been created with leverage are just enabling people to gamble and lose. And I'm always against leverage products because they never work out in the end.
Okay, I want to pivot now from memory to Bloom Energy, which you've been talking about recently. I think we did, and this will Colin here will actually be able to probably tap on this a bit too, because we just started paying attention after Leopold bought, and then we had the Bloom Energy FUD, and lately you have been on a tear saying that it sounds like the FUD is overblown. I believe you tweeted the CEO's response to the Hunterbrook report recently, which was pretty blunt. Quote, We have enough scandium. There's enough scandium to power the planet. This is the CEO of Bloom. We're not dependent on China. Everything else is proprietary. So we have. He's just saying that all these concerns are not worthwhile. But I don't have any details or answers. Ben, enlighten me. What do I make of this?
I mean, I ran a manufacturing company, a commercial LED lighting business. Like, I wouldn't have my investors and customers come up to me and say, "Where are you sourcing your LEDs from? Where are your PCBs from?" Like, are your customers buying the product? Brookfield is their largest customer, right? They went from 5 billion to 25 billion, right? They're underwriting the risk. They're buying these Bloom boxes on the behalf of hyperscalers and neoclouds, and they're basically leasing it to them, and they're making the power and making the delta. So if Brookfield, one of the world's largest asset managers and infrastructure owners, is comfortable with Bloom Energy, I think everyone else should be. I mean, I don't know what the big deal is, like why you have such a hard on to see where he's getting scandium from. Like, who cares? Like, it's just one part of the product. Like, the product works. I know developers that like it. It's quiet. Like, you don't have to wait 4 years for a turbine from GE Vernova. It's at parity with cost, and the whole time is how fast can you energize a product for the first token? Because as a developer, you're borrowing at a high interest rate, and you need to turn over the project to the customer. So, and if they're delivering on time and the product is fungible, if there's a delay somewhere else, you can just move the Bloom boxes somewhere else. I mean, it's a simple solution. Yes, the CEO has been doing this for 25 years. Yes, he was on 60 Minutes and like 25 years ago, and he held up this box, and one day it's going to power a home and whatever. But I just don't see the smoke and mirrors that everyone thinks they see in this company. I think they're just executing and doing well, and it's much needed to keep this AI race ahead of China, because we're under electrified as a country.
I think the Hunterbrook report Hunterbrook didn't do itself any favors. I mean, the head of Hunterbrook, more or less, I believe it was on CNBC or Bloomberg, compared them to the Theranos of this cycle, which to me is a really unfair characterization from the fact that like Theranos literally had a product that didn't work, and that's just not true here. But I do think that it was somewhat fair to push back on the CEO's contention that they don't source any scandium from China, which is just fundamentally not possible if they're going to capitalize on their goals of having multiple gigawatts of these energy cells rolled out, because China has 90% of the refining capacity. So I guess just to ask a more pointed question here, what do you make of his insistence that they don't do that? Do you see that as having any supply chain risk, given that now China has instituted stricter import or export controls on these critical minerals? And also, what do you make of the contention that the supply of refined scandium every year won't necessarily be enough even for Bloom to reach these like 3 gigawatt targets that some people on the street are calling for their energy cells? Because I think those are the key points of the Hunterbrook report.
That's correct. I mean, he did make those points, and I did speak with Sammy on the phone. He's a great guy. He's a big Knicks fan. Happy for them winning the championship, and the Hunterbrook does great investigative work. I think probably what they came up with is true. Maybe all the scandium does come from China, and it's sold through intermediaries in Hong Kong and Thailand or Vietnam, and they're just buying from those. Like, and technically you could say it's not from China, but like Apple went out of its way and says, "Oh, we want to buy memory from was it YMTC or for us to sell iPhones in China." And Micron was going crazy, like, "Why are you buying Chinese memory? Like, why does it matter if you buy Chinese memory if you're selling Chinese made iPhones in China? Like, what's the big deal?" Like, these are all just supply chain issues. And I think I was speaking with some other investors or some mines coming online in Canada or Australia, I believe, that would dovetail into the timeline of the ramp of the scandium from Bloom Energy. So maybe we're investing in some other mines around the world that we don't know about, but they do exist. And I've been told about those companies. But for me, I'm not going to go down to the critical mineral of some company's product, which they're basically getting $25 billion in orders for, they're scaling, and they have, Brookfield basically underwriting them to the wazoo to make sure everything is right, because once you deploy these, the useful life has to be at least 5 to 10 years, right? It has to work and has to do everything for these guys. So like like, why are you always questioning all these things? Like what's like China gets soybeans from America. We're going to question how many soybeans they buy. Like it just, these things are good questions, but I think there's other companies on the market today that are doing more questionable things that deserve more media attention than a mineral in this product that this company is selling.
Okay, I want to one more question on generation before we go to open models. So time to power is like the focus for everything. Neoclouds, compute, everybody along the stack, it just wants to shorten time to power. Let's assume Bloom Energy largely can deliver, I think, up to 25 gigawatts. Like, what is the implication in your view for generation overall? Because right now, like you have to sell your mother to get a gas turbine, like, and those take for those 18, 24, 5 months, 5 years to build. What are the implications for the overall time to power thesis if a company like Bloom Energy can deliver?
We're in a race against China. They're super electrified. They have more electricity per capita. They're building nuclear plants at scale. There's less. In America, we have NIMBYism. Like, don't build this here. Oh my God, this is noisy. Oh, the water is going to get messed. Like, everyone's complaining. In China, it's like an iron fist. Like, we're putting this data center in your backyard. Tough luck. Or this like power generation. They're just moving ahead. Obviously, we can't do that here, but at least a company like Bloom can take one of the biggest natural resources that we have, which is natural gas, that we have so much of that we're exporting now around the world in a liquefied nature, and taking that and converting that to electricity in a quiet, sustainable manner. I mean, like, this is like the killer app that we've been waiting for. And hopefully they can scale it so much and we can use it for homes and commercial buildings, natural gas, everything. Because I don't think as a nation we can get enough nuclear online and solar in the scale, because we're going to have so much electricity needs. Power is everything. I'm going to keep on saying that. Like, power equals compute equals revenues. You have all those things, you win. If you don't have one of them, you're a loser. I mean, that's really what it comes down to.
Okay, let's pivot to open models, because you had some good insights. You had this X article, you've written about it, and this was, mind you, at the beginning of July. The open source war is over. You tweeted a bit about it. Quote, contrary to the obituary writers, the open source AI isn't dead. Since then, Ben, Jensen Huang made his first tweet, co-signed by like the entire AI ecosystem except for Anthropic on open models. What's changed since this article? Because you have massive industry sign on to a similar thesis here.
Yeah, Jensen and I are good friends. We hang out a lot at Denny's, and we talk about AI with the Grand Slam. I heard he likes chicken fried steak. But no, I've studied Jensen for over a decade. I've known about him for over 20 years when I used to work in investment banking. I mean, I have friends that have worked in NVIDIA for a long time, and you look at the parallels of technology and the curves, and really what we're seeing is a lab like Anthropic is just getting too big and too strong, and they're becoming like a juggernaut. And they have great products, but the way they're approaching it is they want to basically decimate the whole ecosystem and create some sort of regulatory capture where they control everything, even down to the silicon. I think they even went to some of the Korean memory makers, like, hey, can you give us some materials? Like, we want to make our own like fab and GPUs, like, because we can do it with Claude. Like don't try, like, in business, for business to work, you need to let everyone to kind of make a little bit of money to survive, not just try to put everyone out of business because you're the best. I get that, and they have a great model and everything is good, but the whole point of open source is you can't be stuck with Coke or Pepsi for the rest of your life, and then this Coke, because they make it so well, is like, they say it's like $500 a can, and then a similar type of Coke in China or like RC Cola is like 5 cents a can, and it gives you that same bubbly feeling, and it does most of the same type of work. So like, why are you paying so much for it, right? I think I said that.
Yeah,
Okay.
you use the exact Coke and Pepsi analogy. But it's
Yeah.
funny, Ben, because at the time when like you made this analogy and Jensen had put out the letter signed by everybody, OpenAI and Anthropic hadn't signed. OpenAI kind of signed late, it seems. Do you think this was them realizing they have to join forces with the rest of the industry against their main competitor, Anthropic? Like, I don't know. Does this change this
Yeah,
duopoly Coke Pepsi thing?
there's a huge Game of Thrones game theory behind all this stuff. Anthropic as a company has hedged its silicon between Google and then Amazon, and then using AMD and then some NVIDIA GPUs. They're kind of all over the place. They don't hold alliance to like one company, as you can see, and they're becoming a threat to those companies that they're also being a part of. I think they're also like a threat to Google to some extent. So OpenAI is somewhat beholden to its investors. NVIDIA is a big investor in OpenAI, and their whole compute stack is co-designed with NVIDIA and OpenAI, and they need that to work. The whole purpose of frontier versus open models is that there's always going to be a market for closed models and frontier, because they're better and they're more secure. For you to run an open model, it actually might even cost you more because you need to set up the hardware, the security, the parameters, and do all that stuff yourself. So the world, the way I see it, is a mixture of, frontier models, which are really good, like OpenAI or Claude. They're going to do most of the heavy lifting, and then the grunt work is going to be done by the open source models, which could come from China, GLM or Kimi, or we have new open source models in America from, like, I think Reflection is a company, and
Collection AI, yeah.
then obviously NVIDIA has its own open source model, NVIDIA Nemotron, which is frontier level class. So if you're a nation, say like you're a small country in Europe, say you're Italy, and you want to have sovereign AI, how are you going to set that up? Obviously, you're going to try to buy NVIDIA GPUs, but what model are you going to run on? Are you going to run OpenAI or Anthropic and pay them billions of dollars a year in API fees, or you're going to try to get some open source model tailored to the Italian language and culture, open weights, and modify it and tune it to what your country needs? And that's what Nemotron is. It's for those people that need all that stuff. But then you could still also use OpenAI as a harness or Claude to do all that stuff together. So the question, it's a mix. It's not one or the other. And I don't see open models as a threat. And to give you better color on that is the whole Hugging Face hacking incident. So you had the OpenAI model break out and hack Hugging Face, and then next thing you find out is like there's no CrowdStrike or Palo Alto Network. There's no big publicly traded software company that could help defend against this rogue AI attack, except GLM 5.2. So they had to fight fire with fire, right? They needed an open source model to basically take out this closed source threat. So that's why you need open source models and closed models to live together in this ecosystem to create balance and harmony, or else being in this closed world will have more problems.
So, I guess last question is then, in light of the open source model letter signatories, kind of a renaissance for open models lately. What does this mean for our main beat, the neoclouds and the data centers, the compute providers? Is this bullish? Because right now there's a little bit of existential angst here as token pricing goes down, GPU rental rates, depending on the rig, go down. What do you think this means in the medium term, say next year, for demand for compute?
I see a token explosion. I don't see demand of compute going down. It's just only going to increase. And we haven't even entered the robotics phase of AI at scale or edge cases. And there's still so many people that aren't even using Claude or OpenAI to do task work through like agentic capabilities. They're just using it as like a chatbot. Like, hey, what's this bug that I saw? Okay, cool, yeah. But like, if you actually use it for real work or the co-work and it's sequentially doing things for you and there are agents running in parallel and researching, like I'm doing that stuff and it's like, wow, this is pretty groundbreaking. So you have basically this computer using thousands of other computers at the same time doing and searches and doing everything and coming back and giving you answers. And from a neocloud perspective, I said on the Jack Farley podcast, or you can see the clip, the neoclouds, not all of them are created equal. You really need to provide value to your customers. And it's just not bare metal GPUs. You need to be able to serve different models at different speeds and at the same time give them the uptime. And if you even have an open source model, that's fine. You still have to host it and charge for it. It's not going to kill your business because you can have a blend of tokens. But if you don't have those services, I think Nebius has a bunch of services. It's sort of like an AWS for AI with that. Then you'll fall behind if you're just basically just selling raw compute. Raw compute at some point it's like a tradable commodity, as you can see with like the orange charts or the silicon data charts. It's what are the value added services that you layer on top of it. And that's basically like a software layer that these neoclouds like CoreWeave or Nebius are adding. But if you're just a pure Bitcoin miner that's just plugging in GPUs, I think you're going to have some challenges in the future. And like I said in that video clip from Batman, when Bane says like, they expect one of us in the wreckage, brother. And I think you're going to find a few of these neoclouds in the wreckage because you needed them to start the fire, right? Because no one believed in HPC and this type of compute. To get to the hyperscalers like Google and Amazon and Microsoft to move, you need these neoclouds to exist to show like, look, there's a real business here. You really need these types of GPUs. There is demand for it, right? And planting those seeds has created this new ecosystem and businesses that didn't exist, 5 years ago.
Ben, thank you so much for your time. Thanks for your insights. We covered a lot of ground, so appreciate you riding with us. Hope to have you on again sometime soon. And cheers.
Thanks, guys.
Thank you, Ben.
Bye, you too.
That last comment has echoes in Bitcoin mining.
Expect one of us in the wreckage.
And this gives you,
yeah.
You have raw compute, and this gives you power over me.
Yeah.
But his point about the raw compute won't be enough in the future reminds me of Bitcoin mining pools during the shift in the China mining ban. It's not a perfect parallel because in this instance, the miners were selling hash rate to the pools, right? But the basic idea being it came to a point where margins were so thin in the mining business that if you just had a mining pool, you couldn't compete and you had to have additional services like financial ASIC financing, for example, firmware, etc., right? And it got to the point where the pool was the service that attracted business and pooled business into your company. and then you use that as a vector to sell into other business models and other business lines.
We both spent some time at Luxor. We know this playbook well.
CleanSpark is a market-leading data center developer with a proven track record of success. NASDAQ CLSK.